The question you should always ask yourself, where is the money? It's all about that commercial real estate. You want to know what is the return on your investment. Now, ROI obviously is the bread and butter for most people. When it comes to commercial real estate, we're looking for cash on cash return. What is COC? How do you get it, and why does it matter for you? I'm going to break down for you after doing $1.6 billion transactions with my team over the past few years. What are the bad ones, the good ones, the home grand slam ones? Give you a good idea what to invest in, what to avoid, and also how to turn a bad cash on cash into an amazing one with this super quick video. And of course, you would extra help and support making more money when you're either buying or selling commercial real estate here in Austin, Texas, or anywhere in across America for that matter. Down below, link in the description, call me directly. I can walk you through the best practices to make you more money in your next investment. That aside, what is our cash on cash return? We want to know if what we're investing in is going to actually make us money. And a lot of times, people will either turn down the wrong deals that could be amazing because they understand this number, or they buy the wrong deals that have atrocious returns for you. Now, when it comes to actually finding our cash and cash returns, it's pretty simple. Actually, it's probably one of the easiest equations out there, besides like the cap rate to determine an NOI. When it comes in here, now, normally when you're looking at your cash on cash returns, I want to know, let's actually make it easy for us. What is my net free pre-tax cash flow? And then I also want to know, how much do I invest? Money invested. Now, more often than not, when you're doing cash and cash returns, it's normally like you have buy the property in all cash. So it's easy math here. We'll do that for this example. If I'm buying an asset all cash, let's say it costs me $1 million to do that. And of course, you can also be down payment and closing costs as well. It also works for you too. And you're like, hey, I don't know how I can find my net free cash flow before taxes. No worries. Up above, a whole video breakdown underwriting for you step by step. But for easy math, your net free cash flow happens after all your expenses, after you divide that from your NOI, or subtract that from your NOI, and also your debt servicing that you need to pay out afterwards every single year. So if you do all the different strategies, your NOI, your expenses, and your debt, this will give you a good example on what is your net free cash flow before taxes. And then money invested will be $1 million in this case. And from here, if I divide, let's say our asset makes you $100,000 a year of net free cash flow, you have a 10% COC. So your cash on cash return is 10%. This is a great deal. Now I'm going to show you after this now, what are the good deals, the great deals, the bad deals, what should you avoid? Now we have this all broken down. You understand cash and cash returns, how to find it, need some context behind that. And then let's show you the ranges. So what you should normally avoid, depending on what your goals are, is our first one. So a COC at 5% or less is what is gonna be either a overpriced deal, a overleveraged deal. It could be bad debt terms. It could be a super unrealistic seller. Oftentimes, you'll find these kind of cash returns and weak income with expenses, no operational upside, no ways to really make it work for you. And typically, these are retail investors, retail sellers, Class A properties. Most of these, they don't have a whole lot of value add. The most of these safe plays, your cash return is not that big, but your appreciation is high, your debt pay down is going to be great. All these different things is what you're looking for. A lot of big institutional family offices, more often than not, want these deals because of less management, less time involved, and it happens in all kinds of markets. So normally, for more people watching this, trying to build wealth and capital, you want to avoid the 5% cash on cash returns. Our next one that is actually a good range for us is going to be cash on cash. This is all 6 to 9% cash on cash returns. So 6 to 9%, these are good. Like what we just saw a little bit ago with that 10% cash on cash returns, that is an amazing deal. This is just below that one. This is normally either safe and stable investments. These are deals that are balanced. It has, light value add. Maybe it's operational. Maybe it's maintenance. Maybe it's decreasing expenses. All these things there are pretty easy and light to get into. It won't be that big of a deal for you to really make them a good return for you. It can also be, good debt structuring, because sometimes you can buy a deal that can become a high cap return. If you're doing, 10% down and the deal's going to lose you money every single year, but you're 20% down, and that somehow allows you to make more cash flow because you're now having a bigger portion, and your invested amount is $100,000, and it makes you $10,000. You have a 10% cash on cash return. But if you was to do a 10% down and it was making you 10K, but your payments, after all said and done for your servicing, is half that, is a bad deal now. So you can kind of see how that happens, probably less than half that. So all these things make a massive role when it comes down to leveraging your finances, maybe with different rates, probably the biggest one. If it's creative financing, they're like, I'm going to give you a 10% interest rate for 20 years of balloon payment, that could be bad for you. So these are going to be a big part of that. Sometimes it could be a triple net lease as well that has great returns for you. It's good tenant base, reasonable rents, super stable. These are pretty much the bread and butter for most people out there who are investing in commercial real estate. And the next one I have on our list for COC is a amazing deal. This is going to be 10 to like 14%. These deals are fantastic. If you can find deals like this, or more often than not, maybe you buy a 6-9% cash and cash return investment and you upgrade it to become a 10 to 14% deal, you're on the money now. Like you're making great capital every single year. And a lot of times this is under market rents, bad operational, maybe you do some expansions to the property. It could be, light CapEx, light OpEx. All these things make a big role for you when it comes to maximizing this. It can be poor management. It can be good and great debt terms. Is also a main part of that. A lot of times you find this in like mom and pop sellers, storage units, some RV parks, smaller multifamily investment deals, and also even like industrial and offices as well, because they have triple net. So all these things can help you a lot get to this number there. And if you have a 10 to 14% COC, you'll normally see around a 17 to 20%, 22% IRR, which is internal rate of returns. And that means that every 4 to 5 years, if you have this, your money is going to double. Give or take, you will double your money every 4 to 5 years if you can find a COC of 10 to 14%. When you add appreciation and debt pay down, and also increasing overall value in terms of rent prices and so forth every single year. And then, of course, our last one on this list for COC is going to be 15 plus. This is elite level deal. It is the goal of the channel. Hope you become elite at deals. So this is great. This is good. And then the top one is bad, depending on who you are. Obviously, there's no, to me, caveat, there's no bad investment. If you hold any deal long enough, it's amazing. Now, obviously, there's faster ways to do this. And over here, a whole breakdown that shows you the two kinds of investors out there. Some are cash flow, and some are going to be like, I want to buy something underperforming more often than not and make it an amazing asset for you. This means that you negotiated an amazing deal for yourself. Like a lot of times. I got a deal for my client. We got it for $250,000 below asking price. 250K below asking price. So we brought it from like a 6 cap to like a 9+% cap rate. Amazing returns for them. And they will probably see in between a good to elite deal on day one almost, thanks to negotiations. And of course, with that help for yourself as well, down below, link in the description, call me directly. I can walk you through the best steps and strategies, how we help you get the best deal that's buying or selling, help you get elite returns, or at least good returns or great returns. It could be under market value deals. It can be, distressed sellers who just have to sell. Maybe taxes came up. Maybe, something in the family happened. Maybe the business partners left them. You never know. A lot of things can happen. Help you get elite deals. And it could be, this strong pricing and so forth, or low expenses. Storage units are great for these kind of deals as well. You're probably going to double your money every 3 to 4 years, sometimes less with these kind of transactions. And this you kind of see as well a 2 to 5x multiple to your money as well. Pretty quickly, again, you can buy a deal that's good or great and turn it into a elite deal just by understanding how to really maximize the returns. Over here, a whole breakdown that shows you exactly 10 ways of value add for yourself to get more returns other than just being operational or expansions. Do what BlackRock, institutionals, and family office investors are doing to maximize their returns on cash-to-cash returns. Number of a whole place is what it breaks down all things commercial real estate. One of them is IRR and more. And of course, if this is helpful for you, make sure you smash that like button, tag your friends, use the sale. Helps me a lot. If you have any questions as well, down below in the comment section, ask your questions down below. And of course, if you want extra support and help making you get elite deals, down below and call me directly to help you the best transactions out there with buying or selling. Of course, thanks for watching. Here's to your empire. See you at the top. Have the best day yet.